it is my very uneducated opinion that I think the stock market is looking for a reason to sell. We are in August, which is typically a month that is when it can be pushed around because the big boys are on vacation in the Hamptons or Europe or the Mediterranean or wherever it is. But yeah,
there's no real news either.
yeah, no real news. So Mr. Bird has been gracious enough to go back and research the last couple of crashes or a couple of crashes, and we're going to see, is the market set up to tank? So what do you got for us?
All right. So you think that the market's looking for a reason to go
do.
down? Is that just a feeling?
Well, again, I've been watching the market more and more because of what you've given me, and we've seen a big rotation in some of the big winners.
Right.
And
Yeah.
I think that's very clear. Um, yeah, and again, I think you can get 5% in a treasury now. So
Yeah.
I think more and more people just want to be flat or just want to be
Yeah.
out.
See, I mean, I can't tell you the number of people that I've talked to that say they've moved a lot of their money to CDs at 5%.
Yeah.
CD.
Yeah.
Right.
Yeah. Yeah. Absolutely.
I mean, there's some millennials out there that don't even know what a CD is.
Probably true.
They're thinking a CD, that's ridiculous. They only pay 0.1%.
Yeah, that's the old thing. My parents used to listen to music.
Right.
Yeah. All right. So what do you got? What do you got for us?
All right. Let me share my screen here. And if I put a lot of this in the newsletter this week. So if anybody would like to get my newsletter, I put it together on Saturdays. I'm usually takes me 3 or 4 hours to do the research and put everything together. And then I've been emailing it out, but from now on, after next week, it's going to be on my website. And all you have to do is register an email. You don't have to give a credit card or anything like that. And it's free. And I put it on the website before I even start emailing anybody. So it's out there before anyone else gets it. So that's the way that it will be moving forward. But let's talk about, so I talked about the sector rotation in the last session. This is the end of day Friday, and most of the sectors now are defensive sectors that are outperforming the S&P.
Yep.
What that means is all of the smart money is rotating out of technology, consumer discretionary communications, and rotating into defensive sectors.
Yeah, I mean, you can't get more defensive than energy, health, and utilities.
Yeah, utilities and even real estate is up here. Wow. And consumer staples is another one. Consumer staples are things that you have to buy.
Right.
Whether we have a recession or not, I hope people still want toilet paper and toothpaste and deodorant. Right.
Yeah.
Hopefully. So those are always defensive sectors, and there has been a clear rotation, and we showed this the last time over the last month, into these sectors. So what does that mean? 10-year treasury is going up. That's never good for growth stocks.
Correct.
And technology stocks. So as this continues to climb, if it continues to climb, it's going to put more pressure on growth and technology stocks. Now, you mentioned that some of the leaders are rolling over. So let's look at a couple of those before I look at some of the past crashes.
Ooh,
this is ugly. This is one that I put in my newsletter. This is SMCI, Supermicro. Anybody that's out there probably knows this symbol, SMCI. It has been in the top 4 in VectorVest for 26 weeks straight.
Oh, wow.
And it has been number 1. This is out of over 9,000 stocks. It has been number 1 for 16 weeks straight.
Ooh.
All right.
Well, something happened last week.
Yeah. Oh, yeah. Something happened. Earnings happened.
Ah, okay.
So they reported earnings, and they beat top and bottom line. This is an AI play.
Okay.
So this is a supercomputer that's used by AI to crunch all the data.
Okay.
That's coming in. But as I taught in the class that I did on the 16th, you can see the psychology of the market if you know what to look for.
Mm-hmm.
And what we see on this chart is a negative divergence. You can see the price going up, this green arrow right here.
Mm-hmm. Yep.
As the price goes up, the momentum goes down.
Was falling, yeah.
This is the price performance oscillator, price percent oscillator. So this is momentum, and RSI, relative strength, is also momentum. But you can clearly see that as the price keeps going higher, momentum is starting to lag, which means the buyers are running out of steam.
Yep.
Now, what does this tell me about the psychology of the market on this particular name? Number one stock for 16 weeks straight. It tells me that most of this, especially from this high right here,
right,
when we first could identify that negative divergence existed.
Right.
When we hit this new high, but we did not hit a new high on momentum. That's the first time we can clearly see the momentum is starting to wane. All right.
Mm-hmm.
And it did come down a little bit, but it continues to go up. So what that tells me is these are all FOMO momentum traders that see this thing for 16 weeks straight at the top of everybody's lists, and they say, I've got to get into this. Everybody else is in it. I've got to get into it. So they all jump on board the train. But looking at this before earnings, and actually the day before earnings, is this little one right here that had huge volume, had a little bit of a down day, but on huge volume.
Mm-hmm.
You see that?
Yep.
I would have been out of this stock the day before earnings for all of these reasons.
Right.
And I told a friend of mine, I said, it's probably going to 270. It's now at 254. Oof. And I think it might actually close this gap down here.
Oh, no.
Down to about 170.
Woo.
The other thing you can see is as the price continued higher, the volume dried up.
Right.
So you want to see volume dry up when the price goes down. That's a good thing.
Yeah,
but you don't want to see volume dry up when the price is going up. Again, that's all FOMO momentum traders.
Got it.
Right. So now all these people are scared. All the people that bought back here are like, I got to get out before I lose money too. And all the people that bought in right here at this bottom as it started to go up, when it gets close to their buy point, they're all going to say, I got to get out too. I'm not going to give back. I at least want to break even. I'm not going to give back my gains. And they're going to get out. And if it breaks through this 225 level, which is this last level of support right here, then everybody else is going to get out and it's going to close this gap down here.
Okay.
Now, I don't know if that's going to happen. It doesn't have to happen.
Right.
But if you just think about the psychology of what this is telling you, all these people that bought back here and had this great run, if they bought at 250 and it ran to 350, $100 gain in about a month, right? They're all saying, oh my God, it's coming right back to where I bought it at. I don't want to lose money. Right. I'm getting out now.
Yeah. Okay.
Now,
and then I think you had what was it, Nvidia was the other one you looked at?
Yes, Nvidia is the other one. And so this is an AI stock. So think about that for a second. AI has had a huge run. Every software company and even hardware company wants to talk about AI in their earnings calls.
Of course, the more they mention it, the higher the stocks go.
Yeah. That's right. It reminds me of the .com.
.com, baby. Yeah.
So here's Nvidia. Do we have a negative divergence?
Yes. Looks like
we do. Made new highs right here, while the momentum made new lows.
Yeesh.
As it's making these new highs, volume was drying up.
Okay.
In fact, on some of the down days, it was huge volume. Right. This tells you that the smart money is getting out. They're selling to all the retail traders who want to get in. Nvidia is another big AI name. They do a lot of other things, and it's a good company.
Mm-hmm.
So it has now gone through all of its moving averages, including the 50-day.
Mm-hmm.
So, I mean, it could come back down here to 375, and it could close this gap back down to 300 again.
Okay.
This is the only one I still own, by the way. I am
Okay.
in cash. I am in cash on everything else.
And what was your buy point on this one? You bought before the pop, I think.
I bought it at 305 down here.
Okay.
And
Now,
I might
did you
just hang
hold
on.
it?
I might just hold it. I didn't buy very much.
Sure.
So it's not going to hurt me even if it goes below 300. And it's a good.
But the question I would ask is, when would you add? You're looking at this chart. You see a lot of pain.
That's the right question. That is the right question.
When do you add?
So right now, let me put this on here. Right now, I have a buy order in right about here, about 375.
Okay. And that would double your position or half?
That would double it. I would buy another 50 right there.
All right.
And depending on what it looks like, I mean, it could get there pretty quickly, actually.
It could. It could be there Tuesday.
Yeah, that's right. It could. Except I think we're going to have a rally next week. So now that the bottom of the gap is down here where I bought it, 305.
Now, let me ask you a question. Would you double your position again at 305 if it got there, or not enough information?
Not enough information right now. I might even move this buy down if this is showing, look at the volume for 3 days, huge volume.
Right. Okay.
Now, earnings on this is the 23rd. Normally, yeah, it's another week and a half away.
Yep. Okay.
Normally, Nvidia moves up into earnings. Normally.
Yeah.
But
right now, I think there's a lot of expectations.
Yes. And the same psychology is going to happen here. All these people, all the people down that bought after it gapped up right here, we're like, oh, it's just going sideways. That's fine. And then it started to take off and they're all really happy. Well, they don't want to lose money.
Yeah.
So if it gets back down to this level and drops through, if it starts coming down here pretty quickly, like you said, Tuesday, I may lower my buy all the way down, back down here to 300.
Ooh, okay.
So I'll be watching.
Now let's just play it out that way and you move it down in time. Is it still your next buy always going to be 50 shares, or would you go, hey, I'll double up and
no,
okay.
No, it'll always be 50. Yeah.
Okay.
Because then I want to make sure that it's moving up. I may add as it goes back up again.
Okay.
Which I think, there's a good chance, and we'll see what happens. There's a good chance that at the end of the year, all of these will take off again.
Okay.
But there's also a chance they won't.
Yeah.
But this is looking very similar to SMCI, and we have to be wary of all of the AI stocks right now.
Oh, for sure. Yeah.
Right. So now let's look at the past crashes.
Okay.
And see if there's anything we can take from that. So I did this on the education class that I did on the 16th.
Yep.
But I did 4 different ones. I'm only going to do 2 this time. I'm going to take one from the secular bear market and one from the secular bull market. And then we'll compare this to what it looks like today. All right.
Mm-hmm.
So here's the financial crisis, 2008. All right. This is January 2008. So the PPO cross right here, momentum cross right there. That's warning number 1. Not enough warning to, sell everything. Then VectorVest gave a confirmed down right here. That's warning number 2.
Mm-hmm.
Then it dropped through its 8-day, 21-day, 50-day, and the 200-day.
Okay.
That's a big warning. That would be enough right there to get out. But then it came back up. Looked like it was going to rally and start back up again. And if you connected these 2 tops right here, it hit this top and started back down again. Came back up and hit it again. And this is your final warning right here. January of 2008. After all of these warnings, this is the final warning right here. Get the hell out. Because even the moving averages couldn't get back above each other. All right. So then what happened? So remember, this is January 2008. That's right back here. There's what happened.
Yeah.
All right. Bottom was in 2009, but you could have been out right here. You could have been out even earlier than that.
Right.
If you got out when it went all the moving averages, but roughly right about in here, you would have been out.
Okay.
Okay. So now let's look at, this is in the current secular bull market. This is the previous bear market we just went through. So you can see here, January of 2022. Remember, all of 2021, the market was just screaming higher. In November, December, the market went higher, but momentum went lower.
Yeah, negative divergence. Yep.
Negative divergence, right? And it also had a head and shoulders pattern. So it dropped below. So here's the vector vest confirmed down. So the first signal was the PPO. Second signal was vector vest confirmed down right here.
Yep.
Third signal was when it hit this high and this hit a low, negative divergence.
Yep.
Fourth signal was when all these moving averages rolled over, right? And then it dropped through the support line right here. That would have been the time to get out, middle of January 2022. Now made a little rally back in March, but none of these signals were enough to get back in again. So what happened? Well, we all know it kept on going all the way down here to October. And now we're starting to come back up again.
Okay.
Look where we're almost at, though. Actually, this chart, when I did it for the class, we actually made another high after this. We went up to 4,600.
Right.
But look, it's right about at this major support line. It's at that support line that it dropped through back in January, which is your final signal to get out. Oops. Your final signal to get out right there. And we actually, because this was from, I don't know the date on this, but this was the 16th. So 2 weeks ago, we actually went higher than this. We went up to 4,600, right up around where that resistance line is. And now we're starting to come back down again. Okay. But these are the warning signals over here to watch. Now, when you're in it, let's say you're in it here, and you see this, and we're hitting new highs, and it comes down and comes back up, and every time before, it's buy the dip, right?
Right. Yep.
Buy the dip, buy the dip. All right, we got a dip. Let's buy the dip. Oh, another dip. Let's buy the dip. Well, how do you know when you're actually in it if this is the start of a big downtrend, a big crash? Well, you don't. You never do. You never know what the market's going to do. But these are enough warning signals to at least move to cash or move your stops up or do something defensive with your portfolio to make sure you don't lose all your money. All right.
So what do we see today?
So let's look at today.
Yeah.
Let's look at, here's the S&P.
Yeah. Okay.
Now on this particular chart, I include the vector vest confirmed signals.
Yep.
So you get everything in one, basically.
Yeah.
So here's the S&P right now. We got a confirmed down on Wednesday. We got a do down, which is usually a faster one, but in this case, it was a little bit behind.
Okay.
So we got two confirmed down signals last week.
We
got the 8-day crossing over the 21-day, but none of these have crossed below the 50 yet. We have the PPO up here. So here's signal number one, PPO cross.
Yeah.
Signal number two is both the confirmed down and the 8-day crossing the 21. So there's number two right there.
Okay.
But that's all we have so far. So now what we're watching is the 50-day going to hold or not? I think we're going to get a rally next week. So I think it's going to bounce on the 50 and go up a little bit. And then we'll have to see if it continues down. But my point is, looking at all of those past crashes, this is the time to be wary. That doesn't
Yes.
mean, it does
Be
not mean it's going to,
careful.
right.
Yeah.
It does not mean it's going to crash.
Yep.
But there's enough warning signals out there right now that you have to be wary. The accumulation
Yeah.
distribution is falling. The weekly trend is falling. It's
Clearly
not
down.
below zero yet, but it's falling.
Yeah. Okay.
So all of these are telling us that the market, just like you said, the market is looking for a reason to go down. And the
Well,
next
the
2 months,
beauty. Yeah. Go ahead.
when there's very little news and the earnings are over, the next 2 months is a perfect time for the market to do this.
Yeah, the market's going to be yanked around. It could be on no news. It could be on a whisper or a rumor. But this is
Right.
why we get Mr. Dan Bird coming back every Sunday to tell us what happened last week and to talk about our setup for next week. What's your website so people can go get your newsletter?
By the way, last week I said that it would be healthy for the market to correct about 9%, 9 to 10%, which would put it right down here at 43 to 4,200, right above the 200-day moving average.
Mhm.
So that, I think, is your last signal, your last hope. If it does not bounce and start moving back up again, which could take until October for that to happen, then we are in a serious predicament. If it goes below the 200-day, then definitely we're headed for a super low.
Okay.
So my newsletter, if you're interested, by the way, I covered a lot of that. I didn't show those charts from the training, but I did talk about that we're right on the precipice. Breakpointtrading.net, you can register your email. There's no credit card required. Just register an email and you can get the newsletter out there every week.
I appreciate you, man. We'll talk next week. Thanks again.
All right, have a good weekend.
You too.